Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, after a period of relentless declines, the Australian dollar rose along with some other markets for a second straight session on Monday as the US dollar retreated following a rollercoaster week. Investors now focus on their attention to Tuesday's midterm election that will determine control of Congress. It is viewed that Americans will be heading to the polling centres on Tuesday for the midterm, in which all 435 seats in the House of Representatives and 35 out of 100 seats in the Senate are being contested. Along with that, besides the US elections, investors would also be preparing for this week's fresh inflation data and also news of an easing in China's tough approach to dealing with COVID. This Thursday, as we closely watch the US CPI data, it will be a key test on whether the US Federal Reserve interest rate hikes have made a dent in inflation and whether the US Central Bank will feel the need to enact another jumbo-sized increase after the last rate hike was at 75 basis points and the fourth one to that. The US Core Consumer Price Index, or the CPI, rose to a 40-year high in September. Even if prices do begin to moderate, the CPI is far above the US Federal Reserve's comfort zone. At present, the inflation forecast looks at 8% rise for the year, which is slightly off from 8.2 recorded in September and 8.3 posted in August. However, the core CPI strips out the measures of volatile food and energy components and is projected to rise 0.6% in monthly terms versus a 0.4 expected. The markets were very volatile on Friday after the data showed that strong hiring and wage increases along with higher unemployment rate sent the US dollar lower. The market has extended to the dollar case after it slips to 110.02 this morning. That's quite a significant drop since Friday's fall, and this has helped some of the markets. As we see now, the Australian dollar climbs further to the upside and looks towards its objective, which is where the 60-day moving average is. That comes in around the region of 65.55 to 80. I do like the way this pattern's shaping up, and if this is a flag, then the pole is quite long. That should project a further upside trajectory to that target, or even to around 66 cents. Any pullback is expected to be shallow, with the support seen for intraday at 64.45. The bulls also cheered in the euro sector, with the market rallying further. We can see here that we are heading closer to the 101 to 103 objective as the market presses higher since Friday's surge. In light of the pattern, I feel that any pullback will be shallow, around 99.65 as an intraday support. We are slowly grinding lower for dollar yen. As you can see, the market is closer to its objective of 145 after it now posts an intraday low this morning after New York at 146.50. I do feel the market, in light of the pattern, should continue on its decline and therefore eventually reach not 145.65, but maybe towards 143.40 as a potential target. Sterling surged higher overnight as it reclaims the level of 114.35.45, which has reinstated the topside target of 116 to 118, with any pullback expected to be shallow and a view of support on an intraday basis of 114.65. The gold a little bit mixed after the Marubozu candle here, and therefore we've seen a slight pullback, but nevertheless still holds to a potential bullish move. That is towards 1,691 to 95 as a target. Reassess from there, because a break above there would give further scope to 1,750. However, the dollar needs to drop further beneath the target of 108 to 109 to even consider any further bullish move outside 1,695. So do be on your guard in case we do get a strong rejection from there. Wrapping up with oil, the market took a stab at the top side. As you can see, it did reach the highs around 92.90 before backing away, back to 91. In light of the pattern though, the 92.25.55 is a key point, and as we can see was rejected after the previous challenge of that top side in early October did set the trend back to a bearish case. So do keep an eye in case we get the same mirrored pattern. However, what is in favour, or one takeaway from the pattern, is that the ADX is trending to a bullish case. So therefore, we may see another upside test, and that is towards the region of 92.25.55. Well, that wraps it for the morning. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the day.